In this video, we're going to see the difference between investing $1 a month and $10,000 a month. I decided to backtest gold, silver, the S&P 500, the NASDAQ 100, the international market, the total US stock market, Bitcoin, Ethereum, and Dogecoin. I calculated the returns first with a monthly investment of $1, then moved up to $10 a month, then $100 a month, $1,000 a month, and finally $10,000 a month, starting with just an initial investment of $1 for each scenario. The first backtest was calculated with data from the past 10 years or the earliest price data available. Then I went a step further and I took the S&P 500 and did the same calculations over a 30-year period, so we can get even more information on how the monthly dollar amount we invest affects our long-term results. But I also ran those numbers again, but instead of investing with $1 initially, I started with $1,000 and moved up to $10,000 and then moved up to $50,000 over 30 years. This way, we can see how lump sum investing affects our total returns as well. All this data should give us some guidance on how much we need to be investing over the long term to get to our financial goals, whether that's driving a Lambo and flying on private jets or just living comfortably off your money. And at the end of the video, we're also going to figure out how much a regular investor would need to invest over the long term to get to a portfolio value of $1 million. If you appreciate all the research that went into this video and me breaking it all down for you, do me a favor and click that like button. Remember that this isn't financial advice, just fun math, and be sure to speak with a professional when it comes to your investing portfolio. With all that out of the way, let's get started with our first asset, gold. Remember that all these calculations assume we are reinvesting all the dividends that are paid out, assume that monthly contributions are adjusted for inflation, and that we did not withdraw any of the funds for any reason to allow for totally uninterrupted compounding. Gold has been around longer than humans have walked the earth, and obviously we find this substance to be very valuable, currently trading at over $1,800 an ounce. We use gold for a lot of things, especially in jewelry and tech, but we also use it as a store of value. We'll use the ETF GLD for our backtest, as the ETF holds physical gold in vaults and the price action is very similar to spot gold. So 10 years ago it was 2013, and we'll start our investing in September of that year. From the calculator we get some interesting data. First, we did turn a profit overall. A hypothetical 120 months of investing plus the $1 initial investment gives us a total cost basis of $121. At the end of our first backtest, we ended up with $169, so a profit of $48. Moving on to our backtest, where we invested $10 a month, we can see higher dollar amounts in returns because we invested more. $1 plus the $1,200 we invested gives us a cost basis of $1,201 and an overall profit of $476. When we invested $100 a month, we had a cost basis of $12,001, and we had an overall profit of $4,757. At $1,000 a month, we had a cost basis of $120,001 and had an overall profit of $47,567. At $10 a month, we had a cost basis of $1.2 million and $1 and had an overall profit of $475,672. Our next asset is silver. Again, like gold, silver has been around for basically forever and has been used to store value. The ETF SLV is physically backed by silver, and we'll be using this for our back test for the same reasons we use GLD for gold. Running this through the calculator, in our $1 a month back test, we had a profit of $35. At $10 a month, we profited $351. At $100 a month, we profited $3,509. At $1,000 a month, we profited $35,096. And at $10,000 a month, we profited $350,957. Next up is the tried and true S&P 500, which is the largest 500 US companies by market cap trading on the stock market. We'll be using the ETF SPY for our backtest. Many investors consider the S&P 500 to be the benchmark that all other investments are compared to. In our $1 a month backtest, we had a profit of $121. At $10 a month, we profited $1,404. At $100 a month, we profited $14,016. At $1,000 a month, we profited $140,136. At $10,000 a month, we profited $1,401,333. Next is the NASDAQ 100, which is made up of the largest 100 non-financial stocks, and we'll be using the ETF QQQ for our backtest. These days, this is dominated by large tech companies and can be more volatile than something like gold, silver, or the S&P 500. In our $1 a month backtest, we had a profit of $240. At $10 a month, we profited $2,357. At $100 a month, we profited $23,524. And at $1,000 $100 a month, we profited $235,191. At $10,000 a month, we profited $2,351,868. Next is the international stock market. These are stocks of companies that are based outside of the US, and we'll be using the ETF VXUS for our backtest. I think it's important to always consider investments outside of the United States because diversifying your portfolio is a way to protect your investments. In our $1 a month backtest, we had a profit of $53. At $10 a month, we profited $527. At $100 a month, we profited $5,270. At $1,000 a month, we profited $52,693. And at $10,000 a month, we profited $526,921. Next is the total US stock market, which is every single stock available in the market, and we'll use the ETF VTI for our backtest. Quick spoiler here, the returns from VTI and VOO are very similar over the long term, but in this backtest, VOO was a better performing asset. In our $1 a month backtest, we had a profit of $134. At $10 a month, we profited $1,316. At $100 a month, we profited $13,137. At $1,000 a month, we profited $131,351. And at $10,000 a month, we profited $1,313,489. One of the most interesting asset classes in existence is cryptocurrency, and our next backtest is Bitcoin. In our $1 a month backtest, we had a profit of $2,795. At $10 a month, we profited $27,637. At $100 a month, we profited $267,053. At $1,000 a month, we profited $2,760,211. And at $10,000 a month, we profited $27,601,795. Next is Ethereum, and our chart only goes back to January of 2016, so our cost basis will be a little different since we're investing for 92 months rather than 120. In our $1 a month backtest, we had a profit of $4,883. At $10 a month, we profited $32,200. At $100 a month, we profited $316,374. At $1,000 a month, we profited $3,148,117. And at $10,000 a month, we profited $31,465,549. And finally, we have Dogecoin, and our chart starts at January of 2020 for a total of just 44 months. Now, I know that Doge has been around for a lot longer, but as we move down the crypto charts, the harder it is to find accurate price data. In our $1 a month backtest, we had a profit of $317. At $10 a month, we profited $2,907. At $100 a month, we profited $28,806. At $1,000 a month, we profited $287,791. And at $10,000 a month, we profited $2,877,644. For those numbers alone, the returns were insane for the NASDAQ 100 and popular cryptos, but of course, those assets carry the most risk and volatility. Now let's see how the S&P 500 did for the past 30 years. Technically, it's actually 29.67 years, given that the chart starts at January of 1994. But I think we can still get valuable data even though it's not a full 3 decades. In our $1 a month backtest, we had a profit of $1,891.96. At $10 a month, we profited $18,783.60. At $100 a month, we profited $187,707. At $1,000 a month, we profited $1,876,941. And at $10,000 a month, we profited $18,769,281. Next, we have the S&P 500 over 30 years, but this time we have a lump sum investment of $1,000. In our $1 a month backtest, we had a profit of $16,653.96. At $10 a month, we profited $33,546.60. At $100 a month, we profited $202,470. And at $1,000 a month, we profited $1,891,704. At $10,000 a month, we profited $18,784,044. Moving on to a lump sum of $10,000. In our $1 a month backtest, we had a profit of $149,651.96. At $10 a month, we profited $166,544.60. At $100 a month, we profited $335,468. At $1,000 a month, we profited $2,024,702. And at $10,000 a month, we profited profited $18,907,042. And finally, a lump sum of $50,000. In our $1 a month backtest, we had a profit of $740,751.96. At $10 a month, we profited $757,644.60. At $100 a month, we profited $926,568. At $1,000 a month, we profited $2,615,802. And at $10,000 a month, we profited $19,508,142. All right, so that was a lot of data, so let's break it all down. Generally speaking, it does hold true that the earlier you invest and the more you invest over time, the greater your returns overall, assuming, of course, your investment goes up in value. And the longer you invest without withdrawing from the positions, the more you make in the long run, which is why for most examples in the 10-year returns, the numbers really aren't that impressive, unless, of course, you are investing tons of money into very risky assets. Gold and silver significantly underperformed in the last 10 years compared to crypto, the Nasdaq 100, the S&P 500, and the overall market, with the highest returns being in crypto and the Nasdaq 100. So if you can tolerate the risk and stomach the volatility, higher risk investments might be worth it for your portfolio. And it is very clear that investing a large lump sum in the beginning has a significant effect on overall performance. It's really eye-opening and might make you reconsider some of your purchases. At least it did for me. A $50,000 car that is worth less the second you drive it off the lot might not be as attractive, knowing how that money can grow over time, in the right investments, of course. And from our calculations, the difference can literally be hundreds of thousands of dollars, which is just insane. The thing is that most investors don't have a ton of cash lying around and can't necessarily afford to put $50K in a lump sum into the market, and probably even more unrealistically put an additional $10K a month just into their investments alone. So I went ahead and calculated some more numbers for you so we could find a sweet spot for the average investor in a few different circumstances. If the goal is to get $1 million portfolio in 30 years using the S&P 500 based on past performance, an investor would need to invest about $63,000 initially and never touch it for 30 years. So if you have the spare cash on the sidelines ready to invest, this might be an option for you. Another option is to invest initially $1 and then invest $435 a month, and you end up with close to $1 million portfolio as well. So if you can afford that $435 a month, that would get you similar results. Now, some people might not have a steady enough cash flow every month to consistently get $435 into their retirement accounts. And after all, life can be unpredictable. Emergencies happen and people lose jobs from time to time. Some investors might benefit from the combination of putting in a lump sum at one time when they're able to, and this means that it would require less monthly contributions over the long run, making it easier to invest every month consistently through the ups and downs of life. According to the calculator, investing $50,000 as a lump sum and then contributing $100 every month for 30 years will get you above the $1 million mark. Everyone's situation is different, so I encourage you to run your own calculations, and I'll leave a link to the one I used for this video in the description down below. Depending on what you calculate, you might realize, like I did, that the amount you're investing isn't actually enough to reach your financial goals, assuming everything behaves like it did in the past. And because past performance doesn't guarantee future performance, we might actually need to invest more or take on more risk to meet our financial goals. Eventually, we all realize that the solution to our financial problems is spending less, building an emergency fund, paying down debt, and investing for the long term. One way to speed up that process and increase our chances of getting to a place where we want to be financially is simply to make more money. That's why I made this video on the top side hustles that are actually worth your time, so check it out here. Thanks for watching. Remember to click the like button if this video was valuable to you, subscribe for more, and I'll see you in the next video.